Gold may actually be a golden opportunity right now, despite the recent bear market drop. That, according to Jim Rickards of Tangent Capital. He says now is a great time to buy gold. But Lee Munson of Portfolio Asset Management is disagreeing. He says there's no growth in gold. And we're going to look at that both right now. Jim, you say now's the best time to own gold. Why? Just because it has fallen?
Well, no, because fundamentally the case hasn't changed, Maria. It has to do with Fed money printing and instability in the international monetary system. Gold, I recommend 10 to 20%, not more than that. You shouldn't be all in on gold. But if you have 10 to 20% of your investable assets in gold, the volatility in gold isn't really about gold. It's about the dollar. Gold's going down in dollar space now because the dollar is getting stronger. That's actually the opposite of what the Fed wants. The Fed wants a weaker dollar. They want negative real rates. We're actually witnessing the complete failure of communication policy at this point. I mean, the wheels have really come off. There was a research report out from Goldman focusing on the word if. The Fed will taper if this, if that. It depends on what the meaning of the word if is. It sounds like something Bill Clinton could appreciate. But the Fed has made a complete muddle of it. But let's focus on the fundamentals, which is they need to drive nominal GDP. They need negative real rates. They need more inflation, or else the debt will be unpayable. And that's good for gold. All
right. Lee, what do you think? You think stocks are a better investment?
Well, I think they always are. I mean, my clients are retired or want to stay retired, and I like to follow, Maria, more of a logical progression. I don't see why I'd want to put 10 or 20% of my clients' investable assets in something that really doesn't earn anything, doesn't pay any dividends or interest, and costs money to hold. We still have a $35 trillion world market capitalization that makes money. We have, countries, we might have some slowdown in Germany, but overall the whole economy is still expanding. So I find it too confusing to really focus on what the Fed was trying to do or not trying to do. All I know is that I believe in capitalism, and it's earning money, and gold doesn't. And it's far more volatile than I think the average investor really understands.
Okay, but isn't gold really a hedge? I mean, if you are of the belief that you think things are going to turn down for the economy, for the markets, do you want to own gold in that scenario?
No, but I don't think you do want to own gold. If you think things are going to turn down, I think that you should be owning bonds, and that's why we have bonds in the portfolios. And if you're going to be on the longer end of that bond spectrum, you're going to make money. And so I think that there's better trades that you can do that will pay you interest and that will actually be productive versus non-producing assets.
Jim, what's the word here? Go ahead.
Yeah, Maria, I think Lee pulled the rug out from under his own case. He kept saying make money, make money. Well, what is money? Money is the dollar, and if the dollar is what's losing value, then you want to own gold. Gold's not supposed to have a yield, by the way. Gold is money. You take a dollar bill out of your wallet or your purse, it has no yield. That's because it's money. If you want yield, you have to take risk. Put the money in the bank. That's a certain level of risk, stock markets, et cetera. Stocks, by the way, I think stocks will go up between now and the end of the year, but that's because it's another bubble.
All right, but what if
that's completely ridiculous.
What's ridiculous?
Long term, the stock market has had a positive real return after inflation of 6-7% when you look out long-term periods. Gold has not. So statistically, gold over time has been a very poor performing asset after you take into account the real return.
Well, yeah, but Lee's committing the fallacy of looking at a very short time series. He's right for most of the 20th century, but we were on a gold standard for most of the 20th century. And then from 1980 to 2010, we were on a dollar standard. Today, there is no standard. You go back 100, 200, 300 years, gold does much better. Basically, paper money tends to lose its value because governments abuse it. It's not really
I challenge you. For 400 years, gold has only maintained its value at best. Capitalism has worked. I'd love to see your research on that. I challenge you on that. I think you're wrong.
Well, look at all the companies that no longer exist. Look at all the currencies that no longer exist. Look at the nominal values. You're right in real space, Lee, you're right in nominal space, but not in real space. That's the point.
Yeah, well, what about when the Fed starts tapering down? What does that do to gold?
Well, that's actually very bad for gold in the short run, but the Fed will not be able to taper. We'll put it this way. If they taper, it'll be the greatest blunder since 1929 in terms of Fed policy. If they don't taper, it's very bullish for gold.
Well, I think if they taper or they don't, I understand. Everybody would prefer that they don't taper because it keeps the party going. But bottom line, they never said they were going to raise the Fed funds rate when they taper. Right. They just said they're going to taper. I don't see the Fed funds rate changing until, I don't know, mid-2015. I mean, Maria, you got real experts that will tell you, but somewhere around 2015. So I think that let's let long rates go up. It only shows the economy is working and making money.
But here's the point. How come when the Fed increased purchases, it was easing, but if they decrease purchases, that's not tightening? That's completely inconsistent. I understand they're not going to raise rates for 2 years. I get that. I don't think they'll raise rates for 4 years, by the way, because we're in a depression. But if they taper, that's tightening. That's just the other side of increasing purchases. About everything Lee's saying,
when I see inflation below 7%, they can
space.
taper.
Yeah, Lee's looking at nominal time series, not real time series.
I would challenge. I am looking at real time series. I don't want to invest people's money and then in the future for them to only be able to purchase what they could have in the past.
But again,
a
you're
Roman centurion gets paid as much in gold as a lieutenant in the army today.
You're presupposing the value of money.
Great insights on stocks versus gold, guys. We're gonna jump, but appreciate your time tonight on this. We'll keep watching this market for sure. Thank you.